Hey, real quick, guys. I was taking a look at this the other night. I just wanted to show something interesting. If you look at this in a very long term, so this is your M2 money supply, right? This is the supply of money in the United States. Of course, there's M1, M2, M3, all these different things, but this is a good standard to go by, and that's your blue line, your turquoise line, or whatever you want to call it, is the S&P 500. So clearly, we can see as money supply comes into the system, um, asset prices go with it. But here's the scary part. I don't know if any of you have ever seen this. Now, I can't change it, changing my screen here because I'm using TradingView to record this. But if you've ever seen a country that's in the middle of a hyperinflation or heading into hyperinflation, you look back at what happened, right? It's pretty wild. You can see that hockey stick figure, and I know a lot of you are on here on TradingView. You understand what that means, but there's a lot of new people that don't as well. So I just want them to recognize when you see these parabolic moves like this, like if you look at Venezuela's uh, money supply, right? It starts to look like this when you get into crazy hyperinflations. And if you look at Germany, Weimar Germany back in 1919 to 1923, like if you were to draw a line right here, right? Oh my gosh, that's a horrible line. But anyway, pretend that's straight, okay? So right around here, right? Let's call this zone 1919, okay? And you can see um, there's a difference here. Now, if you weren't in this time period yet, right? Say the chart ended right here, it looks significant, and it is significant. Like this is probably let's call it 100% inflation, where oh my gosh, we are in trouble, right? But what you don't see coming is, I mean, this looks almost like a hockey stick on their chart. It looks kind of like this, but eventually, just like Bitcoin and things like this, when you look at a longer term view in the future, this almost looks flat at this point, right? Well, let's call this 1919, right? And this here, let's call 1920. And this here, let's call it 1921. And let's call this 22, right? And you can see the inflation is still very high, but into after this point in 1922, it's just a very short time that year where it goes from this level to just parabolic, right? So the question is, we have data going back to 1960. Look at what's been building for a long time. There's been people talking about this for many years. I understand, but if you have a very long-term view, the question is, where do we see that incredible parabolic move? We're heading into it, I would say, right now. So this decade, I would be willing to say, I think in the next 25 years, without an incredible reversal on government policy, which we all know that's probably not going to happen, um, I think we are going to experience that at some point in our lives. And this red line that I have here was just to kind of guide that. So I attach it here. I can see a curvature. Obviously, it's not gonna it's not gonna curve backwards here, but you get the point. Right around this zone is when it starts to go parabolic, right? So you can see somewhere between down here at the bottom, July 2025, right? Somewhere between here and maybe it curves out a little bit more, although it looks like it's in front of that. Somewhere around 2025 to 2030, I would think we're probably going to start to hit that parabolic move where you just see this thing go straight up and this chart just gets dwarfed, right? If I remove, let me try and remove this to give you a better idea. I can't move it when it's like that, where I can't crush it down because I have the S&P 500 on here. So if I was to crush this down, see, this is like the equivalent of what I was talking about back here. It looks huge at that point, but when you really move forward in time, it looks like it's nothing, right? But that move looks something like this, right? And it just goes insane. So I think this is a very realistic hockey stick right here. And I mean, I wouldn't put it past the government. If, like, say the stock market crashes, the real estate market crashes, anything like that, another pandemic, we all know what they're going to do. They're going to print money, right? So I think this is very realistic, which means you are likely to see the S&P 500, real estate, all these different things continue to grow at dramatic prices and even faster in the future. But what people need to start paying attention to is the value side of that, right? So don't just look at the S&P 500 and say, oh, look, the S&P 500 is now at 20 billion, right? and think you're rich or something, because Venezuela obviously is the best performing stock market in the world, but it doesn't buy you anything, right? So you have to start looking at value. Maybe you're comparing the S&P 500 to barrels of oil, right? How many barrels of oil does the S&P 500 cost, right? And you might see the S&P 500 look like this on its chart by itself compared to dollars. But if you priced it in oil, it might be going down and crashing. You see, so that's really important to consider, I think, in the time that we're heading into. But anyway, I just wanted to put this out here because it is a pretty scary situation I think we're heading into over the next 10 years. Of course, that changes when I change all this stuff, but I think we're heading into a time where commodities are going to go through a huge run over the next decade. And in the short term, you're going to see these, ups and downs. You're going to hear people talking about gold and, oh, gold got crushed. It's down 5%. That means nothing in a time like this. So anyway, I think just to give you a number here, just off the top of my head, it's been a long time since I studied this, but I think in Weimar, Germany, it was somewhere around, I don't even know, 800 quadrillion marks. That's their dollar at that time, marks per ounce of gold, which doesn't really mean anything at that point, right? It's just, I mean, there's just paper floating around. All you care about is the gold. But I think you could buy a city block with an ounce of gold at that time. People were so desperate. And if you look at the numbers too, it was, I believe, 92, someone could go check this out, 92 or 93% of all your wealth, all your money that you had went to food. Rent and your mortgage was about, it was less than 1%. It's like 0.93 or something. But, debt gets wiped out here too. So you wouldn't really have a lot to go towards debt anyway. So the debtor wins in this situation, which the government is the debtor, right? But people who own real estate, rental real estate, of course, we don't want to see this happen, but it looks like the probabilities are increasing. But people who own real estate and they leveraged it out with debt, I mean, they would kill it in this time. But the question becomes, are you in an economic inflationary depression that's so extreme, your renters are destroying your place, or they're not even paying you. Maybe you don't even care they pay you. Maybe you just tell them, hey, look, you just take care of my place. It's paid off. I'll make your lease $1 or something like that, right? Just to make sure they have a place to live and your property is protected or something. Maybe that's what happens in a time like this. Of course, there's property taxes too, which are going to go, to the moon nominally during that time. Maybe the percentages don't change, but keep that in mind. I doubt the government's going to stop printing money. I mean, we could see the trend here. Why would it stop until there's a massive problem? That's what they do every time. But anyway, that's the end of this video. Go ahead and comment down here below. Let me know what you think. If you think it's realistic that in the next 10 years we could see that hyperinflationary move, considering the fact that this goes back to 1960. I mean, we got a lot of data there, right? And that's a lot of data, and I don't see this trend stopping anytime soon. I mean, this is kind of funny. It's like you see the S&P 500 and you think this is a support line. Like, oh, it broke support. No, it's back above support. Oh, wait, no, that's the money supply. So anyway, have a good one, guys.